Welcome to a journey through one of the most vibrant and rapidly evolving regions on the planet, Asia. Today I'm diving into why now could be the perfect time to consider investing in Asian stocks as I explore the unparalleled growth and potential this diverse continent has to offer. As Asia is increasingly becoming the heart of global economic activity, it's home to some of the world's largest and fastest growing economies and companies. From the advanced technology sectors in South Korea and Japan to the manufacturing powerhouses of China and the booming markets of Southeast Asia, this region presents a compelling case for us investors looking around the world for the best growth out there. And so what's the driving force behind this investment opportunity? Well, it's rapid economic expansion coupled with a booming middle class. With millions of people entering the consumer market each year, the demand for goods and services is skyrocketing. This demographic shift is creating fast opportunities in sectors like e-commerce, fintech, healthcare, and green energy. And as digital transformation sweeps across Asia, online trading platforms are experiencing explosive growth, empowered by cutting-edge technology and increased access to global financial markets. A new generation of retail traders are emerging. They're savvy, they're mobile, and they're transforming the investment landscape right from their smartphones and laptops. In countries like China, India, and Southeast Asia, the surge in internet connectivity has unlocked unprecedented access to stock trading and financial services. With over 500 million internet users getting online for the first time in the past decade, the potential for growth in online trading is immense. And beyond the trading desks, the Asian economy itself presents compelling growth narratives. From being the world's factory to leading technological innovations, countries across Asia are setting global benchmarks. Economies here are not just expanding, they're transforming, fueled by advancements in technology, infrastructure, and domestic consumption. And so I invite you to join me today as I present to you a deep dive into what I think is one of the best ways to play the boom in Asian markets and online trading. This is a stock I think is deeply undervalued, has huge potential, and for those reasons, I too have recently invested in it. And make sure you watch this video right until the end, as I'm going to show you a unique way to play this particular stock for a potential 150% return with limited downside. And just as a reminder, this video is not financial advice. I own a position in the mentioned security. This video may contain forward-looking statements that may not materialize as mentioned, so please do your own research and always trade at your own risk. Okay, before I dive into this stock, let's just step back for a minute and look at the Chinese market as a whole. So as you probably know, it's been in a steady bear market for the last 3 years now, ever since it peaked out in early 2021. From highs to lows, it's actually fallen by more than 60%. However, that could be changing, not just on the chart here. As we can see, it's formed a really big double bottom earlier this year, in which we've bounced up, and just this week, we've closed above this big downward trend line that's been in place for the last 3 years. And the overall Chinese market may have completed what's known in technical analysis as a stage 1 accumulation phase, and we could be moving into the stage 2 advance phase. And that's typically the best time to get into an asset. And just comparing the Chinese market to the Vanguard Total World Stock ETF here in the blue line, you can see it was correlating quite a bit leading up until 2021. Global markets came off towards the end of 21 and took a dive into 2022. However, 2023, stock markets bounced back. However, the Chinese stock market didn't. And that's largely due to a regulatory crackdown by the Chinese government on some of their biggest tech companies. And that caused a lot of fear in the market, investors domestic and offshore to abandon Chinese stocks. And many have given up on this market and even has gone as far to call it uninvestable. However, like I said, that could be changing, not just on the chart technically, but also just a few months ago, we saw China's leader, Xi Jinping, visit San Francisco on a business trip that wasn't to do with politics, but was more to meet with the CEOs of America's top tech and financial companies. In other words, Xi Jinping has come back to the business table and is inviting investors and capitals back. He wants to put a floor underneath his stock market and wants to help it compete with the world's largest stock market from that of America. And they've even officially come out and said they're going to ease their crackdown and intense regulatory scrutiny of companies and their anti-business sentiment, as now they're looking to turn the tide and instead become more supportive of their companies and markets at large. And that to me represents a big catalyst and potential opportunity to invest in companies that may benefit from this huge structural change that is currently underway. And in my opinion, a good way to do that is to jump on board the online trading industry, which has typically delivered really good returns. Brokers are typically really profitable and have customers that stick with them for many years. They can spend thousands and thousands of dollars on commission and financing charges and other services. And Asian traders love online trading, just like the overall market loves gaming, to the point that even US exchanges like the New York Stock Exchange and NASDAQ are considering officially going to 24-hour around-the-clock trading, with a large part of that being able to open access to the huge and growing market of Asian online traders. And to introduce you into the stock I just invested in, it's actually TIGR Brokers, listed on the NASDAQ under ticker TIGR. And they're actually the largest online broker for global Chinese investors, not just Chinese expats, but those that want to invest in Chinese securities. They're headquartered out of Singapore, were founded in 2015. They also have offices in America, Hong Kong, Australia, New Zealand. They have over 2 million customer accounts. They offer stock options and futures trading, along with managed funds, and just last year did almost 300 billion and transactions. They have really competitive commissions, and they're kind of the bridge for global investors into the huge and growing Chinese stock market, with China the world's second largest economy, and they also help Asian investors access outside markets as well, like a two-way bridge. They also have a very innovative and tech-savvy app, along with a desktop app as well for serious traders. And you could kind of think of them as like the Robinhood of Asia, except they offer a lot more products and services and cater for a much broader market than what Robinhood does. And they've even just recently been making inroads into wealth management and more personalized services for high net worth investors. And it's also a two-way bridge, not only for those who want to invest in Asian markets, but for online traders in Asia who wish to access US markets as well. They can do so through the TIGR brokerage app. And once again, with very competitive fees compared to other app-based brokers available to Asian Pacific traders. They're also getting into more products, like offering Visa cards with competitive FX rates. And they also have a managed fund mall with zero fees, a lot of great customer feedback, with being able to access a lot of managed funds, in addition to paying really competitive interest on idle cash. And they're continually innovating and pushing the boundaries on what they can offer to their now 2 million plus customers, with the recent TIGR GPT, an AI investing assistant, in which their users can ask in plain language things like, why did Tesla move? Could you summarize the key points from the last earnings of Apple? And make stock research and market analysis easy and accessible to anybody. And so here's a look at the long-term weekly chart on TIGR. Even though the company was founded in 2015, they didn't start trading on the market until March 2019. Coming on a bit over $8 a share, it fell over going into COVID, ran up with the rest of the market, then peaked out in 21, just like the Chinese market, and it too also went into a 3-year bear market. However, I think we could be nearing the end of a stage 1 accumulation phase. We're actually near the bottom of the range, and that's part of the reason why I think it's a good risk-reward setup here. And just going back to the China large cap ETF, when the Chinese stock market inevitably goes back into a bull market, a lot of people are going to start trading Chinese stocks again, wanting to access Chinese stocks, and that could represent huge potential for TIGR, because it's still a really small company. Only has a market cap of 553 million, even though, like I showed you, they've actually got 2.2 million customer accounts. And you compare that to Interactive Brokers, who at the moment have only a little more at 2.75 million accounts, and their market cap is just shy of 49 billion. In other words, Interactive Brokers has a market cap about 100 times higher. And speaking of Interactive Brokers, whom I've traded with for over 20 years, and I consider the #1 online broker in the world, headed up by online trading pioneer Thomas Petterfy, who's actually the richest man in Florida. His company Interactive Brokers actually made a strategic investment with TIGR Brokers, with TIGR using some of IB's technology. And Mr. Petterfy actually said, TIGR's established one of the best initiatives that has come to our attention. They have superb management and technological know-how. We had an excellent experience working with their developers and believe they are building a sound platform. Going on to say, they're proven to be innovative, driven, capable of providing their clients with tools, and what they are building is quite exciting. So that's a really strong testament to TIGR for me, coming from someone I really trust, and IB's been known to run a really strong, clean, big business for decades now. Mr. Petterfy actually started trading in the pits back in the 70s and developed his own electronic trading tools ahead of his time, and then turned that into the trader worker station that the IB company is built around. And so that tells me that TIGR isn't like a lot of other dodgy Chinese companies out there, that they're more likely to be clean, and we should be able to believe their numbers, which are actually pretty good considering the tough environment they've been operating in the last couple of years. Not only an overall Chinese bear market, but they were also caught up with a regulatory crackdown, and they were barred from offering the TIGR app to Chinese mainland investors, still accessible in Hong Kong, and outside investors can still invest in Chinese mainland stocks through the app. However, the Chinese government just got a bit paranoid that the app, along with a few others, allowed Chinese mainland investors to invest their money offshore. They're trying to keep the money onshore. And that may not always be the case, which could open up to future growth. However, even given that, their latest fourth quarter still represented a 9.6% increase on the same quarter last year, and their full year total revenue last year was up a very healthy 20.9% from 2022, and they're also profitable, declaring full year net income at $42.7 million, along with increasing their customer accounts as well. Currently just under 2.2 million, with 904,000 of them currently having an active deposit. And I'd say why that's well below the actual number of accounts they've got is because a lot of people open an account with TIGR to invest in Chinese stocks, and they've been burnt a little bit these last couple of years with the bear market. However, when the Chinese market goes back into a bull market, all they have to do is click a button and they can deposit back into their active accounts and start trading again. And what's been even more impressive is their growth and assets under management, from 14 billion at the end of 2022, more than doubling, to 30.5 billion end of last year, as they get more into asset management and managed funds. And they've even been doing some IPOs, helping to bring companies to market. So they're turning into a real broad range financial market services and brokerage. And here's a look at the daily chart on TIGR. Did have a pretty good bounce here on Friday, up 8.5%. We could still be looking to confirm that it has made a bottom here, but stepping out again on the weekly chart. We do have some good signs. These big volume thrusts off the lows are big signs of accumulation, and we've pulled back again to 355. And I think a part of the reason why Tiger's stock price has been depressed for a while, even though their revenue has grown a lot since they first came on the market. 2019, they had annual revenue of 56 million. Last year it was 272 million. It's gone up almost sixfold in 4 years. And the stock price is still more than 50% below when it first came onto the market then, at $8.10 a share. It's because it's kind of been thrown in with the China trade. A lot of global investors have given up on Chinese stocks and have categorized them all as being manipulated and untrustworthy. But like I just showed you, they've partnered with interactive brokers who have a high reputation of keeping a clean business, doing everything above board, and they wouldn't partner with a company they thought was a scam. And like I showed you, this business is much more than just China. Most of their accounts are actually out of the real growing clean market of Singapore, and they have customers in Australia, New Zealand, and America, and are constantly pushing into new markets. Not just countries, but different product types, wealth management, stocks, options, and futures, along with managed funds. What I also like is the guy who created the company out of China, Tianhua Wu, chairman and CEO. He actually owns almost 14.5% of the company, along with his close director, Li Fang, also owning almost 1% of the company. So it's a founder-led company which typically perform better, and he's well invested into it. Another thing I really like looking at the shareholder register is that institutions only have 9.12% of the company. That's really low. Most big large companies have institutional ownership, 50%, 60%, 70% or more. Actually, individual insiders own more than double the institutions at 23%, because big institutions have given up on China as well. However, if they come back, they're going to materially drive the stock price up, and as small investors, we can step in front of them and front run all of that institutional money. And looking at their biggest competitor, Futu, they've got about 60% more clients with 3.5 million registered accounts. Their total client assets is about 485 billion Hong Kong dollars, which is about $62 billion compared to TIGR, which has seen huge growth and assets under management. They now have a bit over $30.5 billion in their total customer account balance. However, Futu has a valuation about 18 times higher than TIGR at 9.1 billion, even though they've only got a little over double assets under management. And just comparing that to some other online brokers that have recently been valued. A few years back, we saw Morgan Stanley buy E-Trade for $13 billion, and we also saw Charles Schwab take over TD Ameritrade for $26 billion. And so now TIGR's a global player in the online brokerage market with over 2 million accounts, and they still only have a market cap of $500 million, which means on a per account basis, they're the most undervalued online broker out there and could have more potential than all of them, being at the forefront of Asian markets. And my custom stock fair value indicator says the same thing as well. And this indicator of mine doesn't just look at past business growth rates, assets, liabilities, and other balance sheet items. It also looks at future earning estimates from analysts to come up with a fair value for every stock around the world. And that's currently got fair value. As I hover over here, you can see the value here at $8.16 a share, saying it's undervalued by 56%. And my other custom fundamental indicators like it as well. Business quality score in the green, really high at 139, and stock crash risk, really low and in the green as well. Meaning this stock has already been de-risked. Like I said, Chinese market's been in a bear market for 3 years. A lot of people have given up on it. However, that sets up for a really good contrarian play here. And my potential has a lot more upside than downside. And so I'm long the stock, and I'm going to stay long until it reaches what my stock fair value indicator says is fair value, for which I've set an alert for, and I'll get an email once the stock price eventually goes above fair value, and then I'll sell and hopefully book a big gain on it. And since it's 56% undervalued, that means if it were to go above fair value, that would represent greater than 100% gain. And the good thing is this indicator is dynamic, so fair value may increase as the business improves, revenue improve, and their outlook and forecast also improves. So by the time I sell it, it may well and truly be above $10 a share, and who knows, maybe a lot higher. However long that may take, I'm happy to sit in this position for a year, 2, 3 years, as I really don't mind being a part owner of an online brokerage coming out of Asia. I think they've got a lot of potential. Founder-led, who's also invested, backed by and partnered with Interactive Brokers, who I consider the #1 online broker in the world, and the valuation at $500 million when they've already got over 2 million accounts. I really like that. And technically, we're near the bottom of this range that it's been holding for a couple of years now. And like I said, the Chinese market itself is looking like it could be breaking out, and it'll inevitably go into another bull market at some point. And then TIGR should do really well then, and is already traded as high as 38.50 in the last bull market in 2021. And as you can see, we're well off those highs. Some people would say that's more risky. Modern day portfolio theory says risk is linked to volatility. However, I agree with Warren Buffett that risk is more to do with the probability of total and permanent loss. And since this is a growing and profitable business, I think it makes for a good risk reward here. And in my opinion, it's been de-risked. And that concludes this deep dive into TIGR Brokers. I hope you enjoyed this video. And if you'd like to learn more from me and get lifetime access to all my custom indicators like stock fair value that you've just seen me use, then click the link below this video and head on over to my website, clickcapital.io, click on the course page, and you can learn all about my online course. Over 12.5 hours of on-demand content covering everything from how markets work, financial markets history, managing and protecting your wealth. I teach you all the principles and best practices for technical analysis and charting, how to properly analyze a stock, fundamentals, valuation analysis, and go into depth with all my active trading and investment strategies. You can also check out my custom indicators for TradingView that I've been developing over years, and I use every day to manage my own portfolios. And like I just showed you, these aren't just technical indicators, they're also fundamental indicators, which you won't find anywhere else. And I do have a package deal where you can get lifetime access to both my online course and my 25 custom indicators with no ongoing fees. They're normally valued in total at over $1,500, and I sell them on my website as a package deal for $597. However, as a gift for you today, once you hit the checkout, click on Apply Coupon, then enter the coupon code TIGR, click on Apply, and that'll knock $100 off and give you lifetime access to both my online course and custom TradingView indicators for the one-time fee of $497, and that includes all future updates. Any indicators I make in the future, they'll get added to your account at no charge, and you've got 7 days to test that all out. If you change your mind or you don't think it's going to be of value to you, no worries, just send me an email and I'll send you money back, no worries at all. However, once you get into my online course and start playing around with my technical indicators, you'll want to keep them for the rest of your life as well. So to take advantage of this special, click the link below this video and enter the coupon code TIGR to save yourself $100 today. And I look forward to sharing my work with you as well. Cheers.